Hi everyone, it's the Cognitive Trader here. And in this video, we're going to go over the double bottom pattern. So what is a double bottom pattern? It's a bullish reversal pattern that occurs at the bottom of a downtrend. And the double bottom pattern resembles the letter W due to the two touch low and a change in the trend direction from a downtrend to an uptrend. So we have a visual here. So here we're looking at GBP, JPY, and we're looking at it on the daily time frame. So here you can see that there's an obvious downtrend, and then it reached one bottom. And then from this bottom, so this key area of support, it went up. And then it went down. So we can see that it was a clear downtrend. Then it went upwards because the sellers were not able to continue the low. And then it went down again and formed another low. So another low or another bottom. And we see that this bottom is slightly higher than this previous bottom. And then now it's getting ready to go up. But in this image, there's a key area we have to pay attention to. So this key area is here, and this is called the neckline. And then, so this horizontal line is called the neckline, like I just said, which is the highest point of the rebound. So this pattern is considered a bullish reversal pattern because the pattern is initiated by a downtrend and finalized in an uptrend. So this pattern particularly is one of the strongest reversal patterns. So we see the two bottoms. So right here is one bottom, and over here is a second bottom. So let me label that for you guys. We have bottom one. And then we have bottom two. And as you can see, it almost looks like a W. And this pattern is very effective in predicting a change in trend direction when we identify it correctly. So ideally, you can see this W pattern or this double bottom pattern on any time frame. So you can see it on the monthly, the weekly, the daily, the 4 hour, the 30 minutes, or the 15 minutes. But if you see this pattern on a higher time frame, it's more powerful. It's of more significance and it's more reliable. Because on the higher time frame, it took a long time for it to reach this pattern. So the odds of it working in your favor are very high. So the odds of the potential uptrend is right around the corner. And then on the daily, you can kind of see that this is kind of a long-term play because you can see all these different candles here. So this took about, let me, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So pretty much over 12 candles that we have in this area. So each candle represents a day. So over 12 days. So this would be a good, swing trade, or you could scalp this up. And it would take like roughly like a week of it going up. So the neckline is very important because the neckline is a very key resistant area. So we need the next couple of candles to close above the neckline. And then for us to have a breakout range. And also here would be considered another neckline. So another support area. So the first bottom here, after we see that was a super strong downtrend, so it spent a couple of days on a downtrend, the market decided to bounce up, so bounce higher. And that's why we have the formation of the first bottom. But this is not an indication of a reversal. This is just an indication of a retracement and a downtrend. And then here we can see on the second low, it discounts the previous downtrend and the buying pressure increases. And there we see signs of price reversal and an uptrend when the second bottom is formed. It's still, however, too early, right? So we need it to close above this neckline to be able to confirm that it'll continue to go up. So the neckline, like I said previously, is an area of resistance. So it's the maximum price and access an asset can achieve over a period in an uptrending market. And then the double bottom pattern is complete once the price breaks above this neckline, indicating there are more buyers than sellers, and that the trend is likely to continue moving higher. So this is a perfect example for us to see. And then we anticipate this area being the area of breakout. And then as soon as it breaks out, we anticipate it continue to rise. So this area would just be a major area for us to watch to see it break through and then continue to go up. Alrighty, guys. So I hope you guys find this video helpful and was clear to you. If you guys have any comments or concerns, please feel free to drop it in the chat. Alrighty, take care. Happy trading.